Wow, it's pretty bleak out there. Cryptocurrency investors find themselves at a crossroads between heaven or hell, between a bear market or continuation in this bull market. And I think retail right now is generally fatigued. What you have is negative price action. This is the fifth pullback that Bitcoin has had since it bottomed out at 15K. It's the third most brutal. The prior two were more brutal, selling off 32+%. We recovered from that and went on to higher ground. I think this results in a similar fashion until proven otherwise. We'll talk about why a little bit more as we review Morgan Stanley's Mike Wilson's comments on the prospect for 2026, which according to the Bitcoin 4-year cycle is not a very good one. So you've got a number of things really affecting the sentiment right now. You've got altcoins that have largely just gone sideways since they made those epic rallies last November that we benefited from. Our portfolio has largely just gone sideways since then. You have negative price action, fueling extreme fear. You have the end of the 4-year cycle. And now, last week, we saw the likes of MicroStrategy that have nearly 500,000 Bitcoin get called into question in regards to them going below 1 NAV. There's other treasury companies, and people are perhaps looking at this as a potential catalyst, a bear market catalyst. So it's pretty brutal in regards to retail right now, and these things shouldn't be ignored. And we're going to be talking about them in this daily market update. Ultimately, not only do I have technical targets for Bitcoin going higher in the total cryptocurrency space, we'll talk about some of them in this daily market update, but I think it's going to be a generally good macroeconomic environment from now going into 2026. And we're going to look at what Mike Wilson from Morgan Stanley has to say on this. We certainly agree with his thesis that we had a bear market earlier this year. For the traditional markets, S&P sold off 20% plus. Crypto, I think in that context, yes, it's gone sideways, but largely hasn't done too badly, given everything markets have had to contend with in 2025. And I think that's more bullish than bearish. But there are a lot of sort of fear factors out there, and we're going to be discussing some of them in this daily market update. So this is from Hunter Horsley. I think he's from Bitwise, CEO at Bitwise. Here's what I see happening on the 4-year cycle. Common view, people believe in 4-year cycles because that's how markets have moved, and that 2026 will thus be a down year for BTC. First order effect, people thus sell in 2025 to avoid the market downside. Second order effect, the 2025 sellers cause 2025 to be a down year, thus breaking the 4-year cycle somewhat. Third order effect, 2026 is open season, 4-year cycles broken, potentially. And actually, given where Bitcoin is today, I'll show you the Bitcoin 4-year cycle in just a second, this would have effectively bucked the trend, as it were. Although we really only have 2 complete cycles, being obviously 2021 cycle and 2017 cycle in terms of the kind of bull markets. We only really have 2 cycles to go on. And could this be broken? Well, I think given the context of what happened in 2022 and how that changed the world and perhaps the financial landscape, given the context of the year that we've just had with the traditional markets going through a bear market on Trump's tariffs, all the uncertainty and whatnot, things could have been delayed. And certainly that seems to be the case for alt season. And I think when I get into things technically with you, I'll look at how BTC dominance potentially now embarking on a downtrend isn't in line with the 4-year cycle coming to an end. In fact, it's different. And I think there's a lot of differences. And I think there's a lot of technical reasons why we're bullish, also economic reasons. And it's certainly not easy for us to remain bullish given the sentiment. And what I mean by that is not that it's not easy for me to have that bullish outlook based on the things that we look at, but more, I feel very much like the masses and the hordes are against us at the moment in regards to being bulls right now. I mean, we've been right thus far. Yes, we haven't had the kind of spectacular alt season like we were expecting. Altcoins for us have just really gone sideways. They've been quite range bound over the past year. We obviously did very well in November, and then largely we've just been going sideways. Overall, our portfolio has been shrinking in terms of value, but still up since November. And I think that's not a bad place to be. If you want to unlock my portfolio, get on board with what we're doing and how we're sailing these seas, do become a patron. Today's a great day. But I don't think we're doing too badly considering. And I see a lot of kind of fakery on it always makes me laugh. There's a lot of people I know out there personally that put information out on X that I know is, not the reality, certainly in regards to how they've positioned or how they've done this year. But that's the game of X. So all the glitters is not golden. So crypto investors have to kind of face the 4-year cycle right now. It's negative price action. It's the kind of fifth pullback Bitcoin's had, the third most volatile by a few percent. I think the first one was 19%. Then we had maybe 21%. This is 24%. The two prior were in the 30s in terms of a pullback. You've got the BTC 4-year cycle ending. Like Hunter Horsley points out there, people probably hedge this, of course, just like they'll hedge MicroStrategy and things like this. It's all kind of coming at once, isn't it? And this is something to contend with. But is the 4-year cycle potentially broken? Perhaps. This year would have been a down year. Will it close as a down year? We shall see. I think one thing that kind of maybe makes me not believe it's going to play out is where BTC DOM is. I think this is now a downtrend for BTC DOM, or phase 4. This was just a breakout and a retest. Clear shooting star here. I think this comes down lower. The way that this would play out with the 4-year cycle was if the reason that this is coming down is because Bitcoin's getting something internal happening, like a forced liquidation of MicroStrategy, which I don't think happens, by the way. That would be your kind of Bitcoin dominance down, but 4-year cycle still playing out. Something internally happening with Bitcoin, but altcoins just don't sell off as much. But this selling off is typically a bullish story for everything, not just Bitcoin, but the cryptocurrency space at large. And this, to me, is somewhat flying in the face of the 4-year cycle playing out. I also think this hasn't been traditional for many reasons. We, of course, have technical targets on Bitcoin, technical targets to the upside for the total market cap excluding Bitcoin, taking us from 1.3 trillion to 6.7, which I think plays out. I am still watching that sort of falling wedge on Ethereum, and I think generally the kind of macroeconomic environment or the environment for assets that we can derive from what we think is going to happen with the SPX, the S&P 500, is going to be a good one. And crypto, yes, there's been a bit of discorrelation, but broadly follows this as an asset. Every time there's been a 20% plus pullback, having engulfed that, gone on and put a new high, there's been a rally for the market, the smallest period being 395 days. That takes into mid next year, which is what we think is going to happen. We've said that that's been the case thus far. It has been, and we think it continues. And this is a generally good environment for assets. And I don't think crypto doesn't appreciate in that context. Ultimately, we're looking at the IWM, things like that, which I'll talk to you about in just a second. And what I want to kind of come on to now is what Mike Wilson is saying over at Morgan Stanley. He's the one that very much turned us on to the S&P every time it's engulfed a 20% plus pullback, a bear market. It's gone on to higher ground or entered a new bull. And that's that's the conditions we think markets are under. Yes, there's going to be ups and downs in that, like we're currently experiencing, but broadly the trajectory is up. This was a 66-page detailed analysis. I'll probably go through this in a little bit more detail at some point, but we'll just read his opening remarks. So this is from the 17th of November. Before I get into this, just to also add, it's interesting that the traditional stock markets went for a bear market. Crypto actually held up remarkably well, given that context. And yes, altcoins have broadly gone sideways in a kind of range. If you're in the right altcoins, by the way, like we are. But that's not so horrific given the kind of conditions broader markets have been under. And we think they've got good conditions ahead of them. So, Morgan Stanley. This is predominantly from Mike Wilson. There's a number of other contributors. He says, 2026 US equity outlook. The rolling recovery is here. We raise our S&P 500 target to 7,800, driven by strong earning growth. We looked at that yesterday. Valuations stay supported as the rolling recovery leads to broadening in leadership. We upgrade small caps to OW relative to large caps. At the sector level, we upgrade consumer, discretionary goods and healthcare to OW. The rolling recovery is here. The capitulation around Liberation Day, the Trump tariff announcement, marked the end of a 3-year rolling recession and the start of a rolling recovery. We believe that we're in the midst of a new bull market. which is technically the case. We've looked at via the S&P 500 and earnings cycles, especially for many of the laggard areas of the index. We think that most of the elements of a classic early cycle environment are with us today. Compressed cost structures that set the stage for positive operating leverage, a historic rebound in earning revision breadth, and pent-up demand across wide swaths of market economy that were mired in the preceding rolling recession. Early supporting evidence of the earnings recovery can be found in Q3 results. Do go and watch our daily market update yesterday. A 2.2% S&P 500 revenue beat rate 2x average and 8% EPS growth from the medium stock in the Russell 3000, the strongest growth in 4 years. We'll talk a little bit about this because there is a rotation happening, I think, from small caps to large caps. And I think the IWM suggests this. And if the IWM is going to gain ground against the S&P, that has to be in a generally bullish environment. Crypto factors into this as correlated to it. Let us continue. Implications of the Run It Hot playbook. The missing ingredient for the typical broadening in stock performance that happens early in a new business cycle is more significant rate cuts than the market expects. While there's uncertainty around this dynamic in the short term, over the next 6 to 12 months, we think that moderate weakness in lagging labour market data and the administration's desires to run it hot will lead to an accommodative monetary policy backdrop, so do we, involving both rate and balance sheets. This, in addition to the stronger earning environment than we expected for the average median stock, is supportive of a broadening in leadership in 2026, and out of consensus view based on our conservative or conservation with investors. We raised our 12-month S&P price target to 7,800, 22x forward EPS of $356. This expectation incorporates higher than consensus EPS throughout our forecast horizon. We see 2025 EPS of $272, 12% growth. 2026 EPS of $317, 17% growth. And 2027 EPS of $356, 12% growth. Key drivers of the bullish earnings cash flow view include a return of positive operations, greater pricing power, AI-driven efficiency gains, CAI adoption to help drive in broadening in 2026, accommodative tax, and regulatory policies that facilitate a public-private growth transformation or transition and contain interest rates through the curve or throughout the curve. We expect valuations to compress modestly versus current levels, but stay elevated relative to history at 22x. Our work shows that it's rare to see meaningful multiple compression in periods of above medium EPS growth of 7 to 8%, and accommodative monetary policies, near-term risk to our call monetary policy. So that's any changes to that. So that aligns with everything that we're looking at. And I think that if you've got this bullish context more broadly for the markets, and crypto is correlated to the broader markets, what does crypto do? Does it complete that 4-year cycle? For me, looking at what I think is to come for the sort of traditional financial assets, the S&P 500 is a great barometer for all of them. Broadly speaking, for me, what we're seeing there is a good reason to expect it not to play out. What we're looking at for BTC DOM, the fact that we have higher targets across the board, the fact there's a great fundamental story kicking in for crypto, and this could be the first utility cycle. I think, yes, there is this crossroad that I spoke about at the start, but for me, there's more reasons to be bullish than bearish. And that's why we remain a bull. And people are going to hate me for that now. But in the markets, it's all about where things are going to be tomorrow, not today. And I'm happy to be, just like we were at 15, 16K, getting back into the markets, get ridiculed for a bit, and then ultimately proven right. If we do get proven right. If we get proven wrong, then fair play. we shall see. We remain bullish and optimistic despite the kind of hordes turning against us. C'est la vie. That's how being a investor in the markets goes. One of the hardest things to do is make a decision. Don't believe everything you see on X unless people are posting receipts, which I do, by the way, for my Patreons. I show everybody where I buy my entire portfolio. I don't try and spoof it. All the receipts, all the proof is there. I don't see that elsewhere because ultimately, I think there's a lot of people telling a lot of porkies when it comes to crypto, investing in it and certainly trading it. And actually, even a lot of people that I've seen out there, when I see some of the things they put on X, knowing the moves they've made, interesting world, isn't it? But isn't that life? Anyway, we're not here to pull the wool over anybody's eyes. We're here to just be honest. Happy to be wrong. But everything that we're looking at thus far leads me to believe we see continuation for the cryptocurrency space. We'll see. Time will tell. That's it from me, guys. Hopefully this video helped some of you. I'm going to love and leave you on that note. See you all in the next one.